So, what is going on with the US housing market? Is it heating up, or is it about to hit a deep freeze? If you're scratching your head, believe me, you are not alone. Right now, the market is sending out completely contradictory signals. It's like a giant tug of war between some really positive momentum on one side and some pretty serious threats on the other. So, here's how we're going to break it all down for you. First, we'll look at these mixed signals head on. Then, we're going to dig into the case for optimism, the green shoots, if you will. After that, we'll pivot to the reasons for concern, because they are very real. Then we'll zoom out to see how the whole economy is playing into this before we try to figure out what a stable housing market might even look like from here.
Okay, so here's the fundamental problem. Depending on which report you read or which numbers you look at, you could tell two completely different, totally opposite stories about the health of the housing market today.
And this right here, this really gets to the heart of the whole puzzle. On the one hand, you've got momentum building. It feels like activity is finally starting to pick up after a long slowdown. But on the other hand, these threats are getting bigger, especially climbing mortgage rates, which could stop any kind of recovery dead in its tracks. These two forces are pulling in opposite directions, and that's creating all the uncertainty.
All right, let's start with the good news, shall we? Let's make the case for optimism, because despite all the confusing headlines, there are actually some key signs that the market might be getting its legs back.
First up, for the first time since last November, we've actually seen a year-over-year increase in new listings. Now look, 0.5% might not sound like a huge number, but the direction is what matters. It suggests that sellers who've been on the sidelines are maybe, just maybe, starting to feel confident enough to jump back in. And it looks like there are buyers out there waiting for them. We saw a solid 3.2% jump in mortgage applications in early March. And what's really important here is that this was driven by people looking to buy a home, not just refinance. That's a really strong indicator of actual buyer intent. And here's the proof in the pudding. Those applications, they're actually turning into real live sales. Overall home purchase volume is up a full 10% compared to the same time last year. This isn't just people kicking tires. It's a real sign that more deals are actually closing. And Mike Frantantoni, he's the chief economist over at the Mortgage Bankers Association. He really ties this all together nicely. He points out that that small increase in inventory and new listings is directly feeding this bigger 10% jump in sales. It's classic supply and demand, and right now it's playing out in a positive way.
Okay, but just when you start feeling optimistic, the other side of the story pulls you right back. For every little green shoot of hope, there is a pretty powerful headwind out there that's making everybody, buyers, sellers, even builders, pretty darn nervous. And the number one concern, the big flashing red light for everyone, is without a doubt the sharp rise in mortgage rates. I mean, look at this. Both Freddie Mac and Mortgage News Daily are showing some serious jumps in just a very short amount of time. This slams the brakes on affordability and can very quickly price potential buyers right out of the market. Now, this is where it gets really fascinating, because this chart seems to tell the exact opposite story of what we just saw with mortgage applications. Redfin's index, which tracks things like home tours and other early buying activities, is actually down 16% from last year. This could be a warning sign that even though the really serious buyers are making moves now, that pipeline of future buyers might be getting smaller. And speaking of confusing signals, check this out. Remember that little uptick in new listings we were just celebrating? Well, guess what? It wasn't enough. It couldn't keep up with the number of homes being sold or pulled off the market. The result is that the total number of homes for sale actually dropped by 2.2%. That's the biggest 4-week slide we've seen since last year. And you know what less choice means? More competition. So you might be thinking, okay, maybe new construction can save the day. Well, not so fast. Permits to build new homes are down, and the number of new homes they've actually started building has dropped too, both from last month and especially from last year. This is a major red flag for the future supply of houses. And Joel Berner over at Realtor.com explains exactly why this is happening. Builders are just reacting to the tough conditions out there. But as he points out, this creates a really nasty cycle. To solve the inventory problem we have now and to avoid it in the future, the answer is simple, but not easy. We just have to build more homes. So what in the world is causing this constant back and forth? Well, the housing market doesn't exist in a bubble, right? To really get what's going on, we have to zoom out and look at the bigger economic picture. And frankly, that picture is pretty on edge right now. This quote from Matthew Graham really nails a huge piece of the puzzle. See, mortgage rates are super closely tied to the bond market.
And the bond market is getting rocked by global instability, especially the conflict in Iran. That kind of thing creates all these ripple effects, inflationary pressure on everything from oil to shipping, which in turn push our mortgage rates higher right here at home.
And all this uncertainty is starting to whisper a scary word that economists really do not like to hear: stagflation. So, what is that? Well, think of it as the worst of all worlds. It's when inflation is rising, but at the same time, the job market is getting weaker and the economy is slowing down. It's a really toxic mix that puts a huge squeeze on people's wallets and their confidence.
And look, this isn't just some abstract economic theory. It's having a real impact right now. A survey from Redfin found that 1 out of every 4 people is actively delaying a major purchase. We're talking a house, a car, specifically because of what's happening overseas. That is a massive chunk of the population just hitting the pause button. Okay, so we've seen the good, we've seen the bad, and we've seen the very uncertain. With all these conflicting pieces on the table, where does that leave us? Let's try to piece this all together and figure out what's the path forward.
You know, this quote from Hannah Jones at Realtor.com, I think it just perfectly sums up the entire situation. That pep, that momentum we saw in the good numbers, it's real. But for it to last, buyers need more than just an interest rate they can live with. They need confidence. They need what she calls that psychological green light that only comes when the economy as a whole feels stable and predictable. Which really just leaves us with this one final thought to chew on. In a market this volatile, a market that's being pulled in so many different directions at once, what actually matters more? Is it the hard number you see on a mortgage rate sheet, or is it that much harder to measure gut feeling of stability? That, right there, is the central question that I think buyers and sellers are going to be wrestling with all season long.